Welcome to EnergyRogue.com, the go-to source for the latest insights and analysis on the energy commodities market. Led by two industry veterans, Bill Shanahan and Brian Pieri, as they host their weekly commodity market recap. With over 55 years of combined experience in the energy sector, Bill and Brian bring a wealth of knowledge and expertise to the table. From trading and hedging to finance and optimization, they have seen it all and are here to break down the latest market trends and share their insights. So sit back, relax, and get ready to dive into the world of energy commodities with Bill and Brian on EnergyRogue.com.
And I told you I don't do mud wrestling anymore. Don't call me back. You know, you do one thing at one time in your life, and everybody thinks it's your lifetime career. I'll tell you what.
The cleverest man in all of Jumanji.
Hello, folks, and welcome to Energy Road. Fortunately, I don't think anybody was on live to hear all that, but hey,
I don't know. They might be. I don't think we get stats from LinkedIn, but
have a well-rounded life, and that's what I try to do.
Identity theft is not a joke, Jim.
So listen, today we are going to talk about losing millions on purpose. And it's a little bit of a twist, but we're going to talk about some stories about why companies and trading strategies do things on purpose that may actually lose money. So have you ever wondered why some traders might purposely take on a loss? Well, a lot of this comes from experimentation. You're experimenting with different strategies and different perspectives. And we've actually seen this in the energy industry to where people will establish physical trading entities so that they can understand, which is basically investing in physical trading so that they could understand the physical market and what is happening so that they could trade the financial market.
Commonly that's usually referred to as trading around assets. That's what they usually want to do. It's trading around physical assets. And so instead of looking at each individual trade, you look at a more holistic approach to the company making money.
Right. And one of the executions that I saw on this strategy was actually with Louis Dreyfus, and they actually established an entire physical trading shop just so they could understand what is actually happening with the commodity so that they could trade the financial commodity. So it's not so much about losing incurring a loss on a trading position, but I'm gonna walk through an example of intentional losses and what is the goal. So let me take you back in time, and I'm gonna walk you through a scenario. And the scenario, let me get to natural gas and financial, and we are going to go back in time. That is definitely there. Okay, so let's go back to 2022. Now, what happened during 2022 on natural gas? We went from $4 all the way up to $9, and then $9 all the way down to $2. So that is actually the path that we had. Now, there's a myriad of reasons why. We're not going to walk through too many reasons why we went through this period. But during this period, there were people that were taking short positions here, 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 here. They were taking short positions, which basically was counting on the market going down, and they had to wait. But then they were rewarded with a $7 move down. Now, that is a particular trading strategy, but one of the reasons that we talk about this strategy or talk about what actually happened in the past is when you look at natural gas, you can say, well, During this period, everybody inside of Energy Rogue was hearing us talk every single week saying this doesn't make sense. And why didn't it make sense at that time? Do you remember, Bill?
Well, I mean, we were way on the high side. The fundamentals weren't, the demand wasn't following what the price was. And so it made no sense to expect that to last that long.
Right. Well, essentially we were growing our new production. That is actually not the chart I was looking for. During 2022, this is what our growth curve was looking like. Every month we were adding about 3 BCF, close to 4 BCF a day of new wells. Now we were declining around 3 BCF. So, but every month, let's show it here, this one. In 2022, every month we were adding half a BCF of new supply. So when you think about adding supply to that with a static demand because LNG was delayed, you have the supply scenario where we were growing supply. And let me actually do this. Let's go back in time. So what was happening during 2022 was this. We were growing from 94 BCF to 100 during 2023 or 2022 to 2023. So we were adding supply. And demand was the same. Demand was the exact same. So when you look at basic economics, what does that tell you?
Tells you the price is going to go down every time.
Exactly. And what was happening to the price? The price was going up. So it's about losing value on the front side in anticipation of what is actually happening. What is the goal? The goal isn't about accepting random losses. It's about intentionally pushing the boundaries of your strategy and really understanding that you've got to experiment. You have to have a controlled environment and you have to have data-driven insights. And that is actually what companies do, such as Louis Dreyfus. They were in a physical shop because they would see this scenario and say, well, wait a second, we're actually growing supply and our demand is the same. So this is a bearish event. And so that is actually what was happening in 2022. And that's part of the reason that they were losing money every single month, trading companies and people, but they were rewarded. And when they were rewarded with a big, big return. And that big return was this. They gained, well, from the peak, $7. So if you were on the right side of this, you may have been able to short here or short here. This is not trading advice. We're not investment advisors. Read all the disclaimers below. But these are strategies that you may have to face some losses. And that's why risk is the most important element when you get into trading. So that is actually.
The other thing that happened was when Freeport went down, that kept the demand down.
Mm-hmm.
And supply, and it took quite a while for supply to back off. It took a while for the rigs to slow down.
Right.
So when you compare that with the rig chart, you'll find they're related. They're just not on top of one per month. They're just related eventually.
Well, because what you were talking about is on the demand side during 2022, you will see that we had Freeport, which had their event right here. We went from 12.5 to 2.5. And this created a big gap. Now you may be asking why the trend up. Well, this is when other facilities were starting to pick up the gap or pick up the slack and actually accelerate some of the or optimize how much throughput they actually had. So it is about experimentation. It's about a controlled environment. It is about data-driven insights. And what we're going to talk about today is when you experiment and refine and scale your strategies, it is about tinkering with those strategies to make billions of dollars. So when you trade, you should actually evaluate, and again, not trading advisors, not investment advisors, read all the disclaimers below. But when you do this, you need to continue to experiment because it's about different things. In the energy space, one of the things that we see consistently is people fail to deploy an adequate risk management policy, control their emotions, and continue to learn. Typically, what many people do is they overlever on one strategy. And when that strategy doesn't work, they think it just that it just doesn't work. It may not be
Yeah,
the right time. Oh, go ahead.
back when I was doing this, you call that marrying the trade. You get into a trade, and if it's starting to lose, and you're saying, "Yeah, but it's right. Yeah, but it's right. Yeah, but it's right." That's where you get more. That's where you're talking about controlling your emotion.
Right.
You go risk management is all about what is really happening and what's the probability of the outcomes that you're proposing. If the probability goes down, it's time to get rid of the emotional control, go back to your risk management, and take that moment as a learning moment and adapt your strategy to cover that issue. And so if you're looking for a one and done trade, the only thing I can say is get out now.
Right.
Because one and done will break you. So so the important part on this is realizing that if you've got everything riding on trades, you're already in a dangerous situation, and you need to really. That just sounds bad. You need to seek professional help, and I don't mean a psychiatrist. I'm saying you need to go learn about trading and get better at it. Don't blow your whole portfolio because you've got one trade is eventually going to work. Well, what's the saying, Brian? The market can remain illogical longer than you can remain liquid.
So one of the books that I absolutely love is the Turtle
Here we
Trader.
go with the turtle again. Yeah, here we go.
Huh?
Your favorite turtle trader.
Yes.
I think you just like the name.
Well, I love the concept, and for those that never watched Trading Places, Trading Places, I think, was rooted in this story. It was a commodities brokerage firm that actually hired and trained 20 traders, 20 people, and compelled them into a trading, or not compelled them, but gave them a trading book, and each one traded the book. It was a strategy. And the reason that I like the strategy is not because it was a crafty strategy. It's because it was about 100% risk management. The reason that I like that is it taught you when you were overextended, you have to exit your trade. You remove emotions from your trade. For example, in this scenario where we were talking 2022, and I'm just using that because that was one of the most recent volatile spikes that we saw in the energy business. As you were stepping up in the market, if you took a short here and then you thought, wait a second, I'm losing money here. If you can't afford it, you need to exit your position, and you exit and you lose your value here. And then this is part of the reason that it's not about you exit the thought. You may say, I'm going to re-enter the short here and then exit here. And then as it builds up, you may want to build more short positions. And then as you're building those short positions, then you exit down here. So it's about continuing to manage your position, because it is not one position, it is an amalgamation and something that you look at structure after structure. And we actually have a good webinar on how to approach trading. So if you're
Brian,
interested,
go back to that chart real quick and spread it out over longer years.
All right. What years?
Just give me a good time. We go back
This
to
is all the way back to the year 2000.
okay. So when you look at this chart, do you believe the spikes? And the answer is no. So
Actually,
when you look at the data,
I did
you
hear.
look at the data, they never stayed.
Yeah.
And that's what we're talking about. You look at this, you need to recognize a spike when it's a spike, but when you look at where it should be trading, where it has been trading, where all the fundamentals match up, this should be telling you something.
It tells
It
you
should
that
be telling you something based on your portfolio.
Well, for instance, you look at the $4 and $2, and we spend most of our time in that range with periods above, and we hadn't figured out shale during this period,
Right.
right? And
But even then, if you'll come over here in, I guess that's about 2020, where you see that dip, that's telling you something too.
Yeah.
This goes both ways.
Yep. Well, I mean,
and I draw that $2 line probably closer to about 250.
Well, and here's the thing, and that's part of the reason every time it reaches this level, that's part of the reason I typically, as an individual, not financial advisor, not a trading advisor, that's actually when I want to accumulate. And I want to trim my positions or be more cautious above that $4 line. So,
Right.
and you can actually see that on what has happened recently. You know, we went up to $4, right? We went up to, let's actually go here. We went up to $4 and we bounced real hard off of it. Let's actually do this. There we go. And we went up to this $4 and we bounced back all the way to this 375 number. So today we're back up to about 390, but personal opinion, I don't think we've seen the highs on winter yet, but that's a story for a different day. Today is about
the whole point is that we look at the data.
Right.
You take the emotion out, you look at the data, and that's what you're doing. You do basically the same thing with everything else in your life, except for maybe your personal relationships, but that's a whole nother podcast. And you make objective, not dispassionate, but objective decisions. And so the story is that we know people who have lost money on both ends of the scale there. And part of it was because they married the trade. They got too emotionally involved. They're trying to hang on. They were trying to wheel the price up or wheel the price down. And that just doesn't work. And so what you do, though, is that once you understand your strategy, and this is what Brian's talking about losing the millions. Once you understand your strategy, you have to have the confidence to let it work. And there might be a time when you're in a loss. And by the way, it's not just on trading. This is on physical assets as well. I remember a time we were laying pipe, and I was laying 3 miles to split connect a well. Everybody says there's no way those economics work. And what I told them is because you don't understand the long-term economics. Because I know there's 9 more wells coming along that 3-mile stretch. They're just not today. And so economics for laying that 3 miles of pipe was completely different than anybody else who was just trying to lay it for one well. So that's where you have to understand your strategy and give it time to work.
Right.
And it's
right.
And if you're in a very short time frame, There's a completely different strategy for stuff like that. But even then, you still have to give it time to work.
Well, and this is part of the reason that we focus around fundamentals, because back in August, we actually were below $2 on natural gas. And what did we start saying around that time?
It was going to 4. I mean, that's what I was saying. You were saying
Yeah.
375, but
That's true. But people thought we were crazy. They thought there's no way we're going to be at 4. We're at $2. You're talking about a double. The reason why is we were actually watching the numbers. We were looking at supply and demand, and we were looking at the balance. And one of the things that we noticed on the balance side is this chart right here, which is one of my favorites, which is how much summer injections we were seeing. And what was happening is we've been stair-stepping down on our injections, which means there's less, even though we have grown on production, grown on demand, we are actually inserting less into the ground as we previously used to, and or on a reconciled basis. Or said a different way, this is one of Bill's favorites, is let's take a look at the storage. Okay. So this is going back to 2011, 2010. So what can we see here? We can see that 4 TCF is kind of the max on storage, right? And then the lows on storage are, I'd probably call it 1.5 TCF. So, so when we exit storage season, I do expect us to be down. But one thing you can count on is anytime this level is super high, we are going to be in a bearish market for the next year. And what we were seeing is a likelihood that we were going to be below those lines and in a more quote unquote normal time period. And that's part of the reason it's like, if you are trading energy commodities and you are just trading based upon technicals right here, if your trading window is a day or 2 days, great, fantastic, focus on technicals. If you are focused anywhere beyond that time frame, let's see, where am I going? Oh, there I am. If you are focused on anything that is held longer than 2 days, you should have an idea on supply, an idea on demand, an idea on storage, idea on exports, imports, and if you
understand the trends.
One of the things that I was going to get to on this is, as we look at the emotional control, measure your risk, execute your plan, and scale up. And you should be looking at technical analysis. John Murphy has a great book on that. The Logical Trader, isn't that your favorite book?
Yes.
The Turtle Trading System, which is one of my favorites, and the Candlestick book by Steve Neeson. Those are all, if you hit us up on the comments, I'll link those books out there, but those are books that you should look at. But if your trading window is beyond 2 days, or if you're holding window, then you need to be.
Brian, we might even add to that as beyond 2 days or beyond the close of the current contract.
Yeah. For instance, I just did a video this morning that was talking about the fact that as we are looking at the contract roll, this is yesterday's close prices, but let's take a look at this. We have the February contract and the March contract. Now, then where are we going to center? Are we going to center here? Is the March contract going to come up? Is the Feb contract going to come down? Based upon this, I think the March contract is based upon what's happening today. The March contract is gonna go up. But what
So,
here's what I
uh,
here's
hang
oh
on
go
here,
ahead.
Brian. You moved ahead too fast on that. Let's go back to that. What Brian's talking about is when you get to the close of the front contract and the next contract move together. They get closer. That's what he's talking about, the middle. What that means is those prices will come closer together. And because if you don't, you have a gap. And in technical trading, gaps are people don't like gaps. And so they happen, but most of
Right.
the time there's something going on. But they're going to move together. So in this case, how are they going to move together? Is the front month going to come down? Is the out month going to come up? How much are they going to come up? Are they going to be exactly 50-50? Or are they going to be, is the out month going to come up higher than, so that's what he's talking about when he's talking about looking for the middle, because those prices will tend to come together.
And this is going to be on January 29th. So that is when the February contract rolls off. And this is 29. And the March contract begins trading. Now, a lot is going to happen between now and then. And this is where taking a look at what could drive us up or down, this is the center of the business, which is you need to evaluate supply, demand, imports, exports, storage, and rigs. And new supply and new demand and EIA and OPEC are good sources of information. But the reason that we created energyrogue.com is because we found ourselves spending 30 plus hours a week poring over information from EIA as well as states, Texas, Oklahoma. We actually cover in our suite of services and financial information from NYMEX, EIA information, OPEC information, Texas information, Oklahoma information, Colorado, Wyoming. We go through all of these and we research it into a system, and part of that system is why we developed Rogue Radar and Rogue Edge. This takes you from a sea of how do I know what the supply is, the demand, the the trends. We actually put everything into Rogue Radar so that somebody could start off and say, let me just give you a sample. So in Rogue Radar, you get 2 PDFs every single week. You get the Monday game plan, which is right here, which is actually going to tell you. So this came out Monday. And this week I am watching 76.26 closely on crude oil. Let's actually take a look at what happened on Monday. On Monday, we were oh yeah, from Friday we were at $77. So we went down to 76.26, and that is actually the level that we've kind of stabilized. Let's take another look. This week I'm watching 387 as the key bull bear line. What has happened there on gas? This is, we started out the week all the way down here, right? Which is like 375. I was saying, watch this 387. And what you'll notice is we went off it, back down, back up to it. So that is kind of the key bull bear line that I'm watching. So you will get access to that as part of Rogue Radar, which is $89 a month, which will save you 30 plus hours a week. Because in addition to that, you will get our Monday game plan video along with our Rogue Radar breakdown of the entire week. So that is everything you get inside of Rogue Radar, which includes our red light, green light for storage, weather, production. This gives you a weekly template that tells you, are we bullish or are we bearish? And you can see everything's looking pretty green for natural gas, but everything is pretty mixed on crude oil. And what have we had? We've had bullishness on natural gas and a meandering on crude oil. So this gives you a convenient way to quickly look at the market, $89 a month, $3 a day, so that you can understand what is happening on the natural gas and oil markets. Now, for those that want to step to the next level, That is Rogue Edge. You'll get everything inside of Rogue Radar, plus you're going to get access to our Rogue Energy dashboard, which is going to give you access to natural gas, NGLs, crude oil, refined products, electricity, rigs, maps, so much more. Analysts actually spend thousands of dollars a month for this type of information, and we condensed everything into interactive charts so that you can actually quickly assess this. You don't have to go get the data, and you also get our beta test of our Energy Copilot. Let's actually try this out. I want to try this out live. So crude oil, natural gas. What do you want to trade, Bill?
Let's go with nat gas.
All right, nat gas. What is your ideal time horizon for your trader hedge?
I want to look at 1 week to 3 months.
1 week to 3 months. Do you like looking at technicals or fundamentals?
Well, let's stick with the technicals. I'm going to see what that looks like.
All right. What fundamental factors do you think are important?
Let's look at, 1 to 3 months. Let's look at production and exports.
And exports. What technical factors do you think are important? Moving averages, MACD, RSI, or support and resistance levels?
I always like MACD.
Right, MACD. And this is updated weekly for those watching. But if you are in Rogue Edge, which is $179 a month, you get access to this. Let's see what it comes out with. So this is going to capture a strategy.
This comes back, Bill. If this comes back, Bill, you're a freaking idiot. Me and you gonna have to
talk. Let's see. Okay, I'm gonna read this off. Hello, I am your trusty AI co-pilot, here to help you navigate the turbulent waters of energy trading. Together, we'll analyze both the fundamental and technical signals to create some compelling trade ideas. And don't worry, I'll keep it light and enjoyable. After all, who says trading can't be fun, right? Now, tell me the specific insights you're looking for, and we'll get started. So here is Brian's analysis. So I load the analysis of what I'm thinking. Brian believes natural gas has not seen the winter highs. Factors, this is not trading advice, but this is available in Rogue Edge. Factors like strong demand, decreasing production. We're down below 100 BCF a day. We were 104 3 weeks ago. Rapidly falling European storage could lead to price spikes. Key support is 387. If it holds, we could see a bullish move towards $4 and possibly $4.50 or beyond. That is my personal analysis. It's not trading advice. This is our AI co-pilot. So a review of the analysis, focus on production, demand, and export dynamics. Technicals utilize MACD. So a trading plan, consider entry at a 387. Risk management, set a stop loss slightly below 387 to manage risk. So if you took a position this morning, for example, you might have entered around this 387, right? And you would have set a stop loss probably down here. Well, you'd be in the money. So that is what AI is telling us right now. It also gives an overall sentiment of bullish. The moving average 9 period, 20 period, RSI, MACD, all of those are looking bullish. And crude oil is also looking bullish. The conclusion, we're on a bullish trend and strong, supported by strong technical and indicators, positive fundamental factors for natural gas, strong demand and limited supply, crude oil, anticipation of sanctions, and potential demand recovery in China are influencing factors. Do not take this as trading advice. Again, do not take this as trading advice. So
let's
read
do
all
not
our
take that as trading advice.
So that is pretty fascinating. That gives you some interesting ideas to look at.
So the whole idea behind this AI trading co-pilot is for you to be able to test your strategies without having to spend a bunch of money. Now, AI is exactly that. It's AI. And so it's not a trader. It hasn't traded, didn't do that. But what it does, it goes out there and looks for things to do that. Sometimes I know when you start talking to doing the AI and you see this AI and it pops up
It took
to
me
you.
so long to do so many important things.
That was AI, right?
But here's the thing. AI is not going to tell you, artificial intelligence is not going to tell you when to trade, when to buy, when to sell. And that is actually the reason that we introduce AI Copilot as an idea generation. This idea generation is complemented with our Discord channel where we actually dive in deep and we actually discuss these dynamics every single day with charts, with data, with pictures of the recent snow. So we actually cover all this, and we actually talked about this morning. We are likely headed to 387 again, and that was this morning. And what happened? We went from 375 to 387 and beyond. And additional to that, we also said, look for 397 next, and look what happened. We're well on our way to 397. So
Right.
that is actually what we're arming people with, is the ability to analyze and assess their positions and really understand oil and gas markets. And if you need just a starter plan, Rogue Radar is it at $89. Rogue Edge, it opens you up to Q&A with Bill, with Brian, with our team of energy experts, which is on 5 different continents. So if you're interested, there's links down below. Now, it's in a sales pitch, but it's really about how to utilize and leverage resources, which you can find much of this data, not all of it. You can find much of this data, but you're going to be spending 30 plus hours a week because that's what we were doing before we started energyrogue.com. So,
and after you spend that 30 hours a week, you'll still need insight.
well, it's how to interpret. In other words, one of the interesting things that we were talking through is let's actually bring this up on right here. So last year, a year ago, on crude oil, let's see, where are we a year ago? That was right here. We actually were looking at the total crude production trend, and we were looking at these trends, and you could see from a year ago that these trends were headed down. This is our net change on crude oil production. We could see that they were falling, and as they're falling, these trends are changing, and we knew that we weren't going to grow crude oil production. And what has happened on the supply side? We've kind of meandered sideways for the last year. We've grown a little bit in the fourth quarter, but what you can see is we're recently dipping off, and from October of 2023 to today, we're relatively flat. We've grown a little, right? We've grown a little, but not that much.
Yeah, and in order to grow that little, though, we've had to produce a lot.
Yeah.
So on average, we want to grow 40,000 barrels a day. We have to produce 640,000 barrels a day to overcome decline.
Right. That's exactly it. So that
right
is
now
actually,
we're having to produce what does that make that? Probably about 15 barrels to 1. To get 1 barrel, we have to produce 1 barrel increase. We have to produce 15 barrels.
let's actually take a look at this. This data runs behind a little bit, but we actually are. We are actually producing. That's cumulative. Crude oil from new wells is about 650,000 barrels a day.
You're going to say net what?
And decline. So every month we decline over 600,000 barrels a day. So we have to create 650,000 barrels a day of new supply to actually offset that decline. So that is actually something that that I'm looking at that is really, it's a remarkable thing. And with the number of rigs, we're actually looking at a more lateral position. We're not going to be growing or shrinking. We're going to be more,
Right.
natural gas is likely to fall a little bit, but we'll walk through that. But the main thing is, if you do not focus on fundamentals, you're losing a big piece of the equation if oil and natural gas impact your business. So that is actually
The bottom line is
thing.
oil and natural gas do impact your business. If you ever
Right.
need to know why or how, reach out to us. We can show it to you pretty quickly.
Yep. And this is what we're here to do. EnergyRogue.com is here to save you 30 plus hours a week. You can go to EnergyRogue.com. There is a link down below. And again, for those just getting started, Rogue Radar is going to give you insight and perspective into what might be happening each and every week for only $89 a month. And for those that really want to dive in deep, $179 plus it opens you up to our international energy experts Discord room plus our AI energy copilot. So I think that's all we had for today, isn't it?
I think that's it for today. And
So I
listen,
pulled
to
out
start.
every trick in the book, and I got them to make you an offer.
That's good. And you know what we always say about that, right?
What do we always say about that?
We're always saying, if they make you an offer, take it.
That's kind of like a Yogi Berra. When you get a fork in the road, you take it. So
Exactly.
So anyway, folks, thanks for tuning in. Really appreciate you. Drop us a like, drop us a comment, let us know what you're thinking, what you want to hear about during 2025. We are actually doing so many different projects for 2025 growth, and we'd be excited to hear from you. So I think that's all we had for today.
Just
So
remember,
two dudes setting out with a common goal.
So listen, folks, thanks so much. I hope you have a fantastic rest of the Wednesday, and just let us know if we can help. And we're here for you. So drop us a comment and let us know what you want to hear about. So that's all I got. Any parting words, Bill?
no, you guys just have a great January, and let's get this year started off right.
Yep. Have a good one, folks.